Today is Wednesday, November 8, 2023. 5 of 11 sectors closed green. Real estate led, and energy lagged. Federal Reserve Chair Jerome Powell's conference speech said little about the economy or monetary policy, but urged Fed economists to be flexible on their forecast methods. Eli Lilly closed at new all-time highs after the U.S. Food and Drug Administration (FDA) approved tirzepatide for obesity, opening the door for broader use of the blockbuster drug. Shares of restaurant-focused technology company Toast were toasted after it reported an unexpected third-quarter loss, with gross payment volume missing estimates. Language platform Duolingo rose 6% after its third-quarter earnings beat expectations, and the company offered stronger guidance for its current quarter. And lastly, payment stocks were in focus today after Dutch payment company ADN BV pre-announced better-than-expected third-quarter results. Disney's 82 cents per share in adjusted earnings topped the 70 cents expected, as did its Disney Plus subscribers of 150.2 million versus 148.15 million expected. However, revenues of $21.24 billion were just shy of the consensus $21.33 billion. The 7 million new streaming customers helped the business narrow its losses, with executives reiterating that the combined streaming businesses will reach profitability in the fiscal fourth quarter of 2024. Dish shares were up about 3% on the news. Warner Brothers Discovery reported a wider-than-expected 17 cents per share loss, with revenues of $9.98 billion meeting expectations. Its lackluster subscriber numbers and declining advertising revenue weighed on results. CEO David Zaslav said, "This is a generational disruption we're going through that with a streaming service that's losing billions of dollars. It's really difficult to go on offense." WBD shares fell 19% to their lowest levels since January. Roblox 45 cents per share loss and $839 million in revenues topped expectations for 51 cents and $830 million. Its revenues aka bookings rose 20% year over year, as did its average daily active users and hours spent. However, its average revenues bookings per user was flat year over year at $11.96. Recently, the company has made significant efforts to cut expenses amid slowing revenue growth, but noted strength in East Asia and Europe last quarter. It will begin providing guidance in fiscal 2024. RBLX shares were up 12% on the day. AMC Entertainment reported a third-quarter net loss of 9 cents per share on revenues of $1.41 billion. Analysts had anticipated a 25 cents per share loss on $1.26 billion in revenues. The success of Barbie and Oppenheimer helped it achieve the best third-quarter revenue and adjusted EBITDA in its history. With its stock split and $AP share conversion behind it, the company has been able to shore up its cash reserves to $730 million. However, challenges remain for 2024, with domestic attendance still 16% below pre-pandemic levels, and the Hollywood writers and actors strikes pushing out releases into the future. AMC shares were down a few percent after hours. The New York Times recovery in the advertising market and rise in subscriptions for its higher-priced bundles led to an earnings and revenue beat. It added 210,000 digital-only subscribers last quarter to 9.7 million. With its average revenue per user for bundled subscriptions of $12.81 versus total digital-only of $9.28. Despite the rebound in advertising, executives remain conservative with their estimates, expecting a 4% to 8% decline in total advertising revenue for the fourth quarter. NYT shares rose 6%. 3 of the hottest IPOs of recent history just released their first earnings results as public companies. Let's see how they did. First up is semiconductor equipment maker ARM Holdings. Its adjusted earnings per share of 36 cents on revenues of $806 million topped expectations of 26 cents and $740 million. However, its guidance for the current quarter came in below estimates at $720 to $800 million versus $776 million expected. Next, grocery delivery company Instacart posted better than expected results. Third quarter revenues of $764 million or up 14% year-over-year, and topped the $737 million expected. Gross transaction value narrowly beat the consensus view at $7.49 billion, vs $7.46 billion expected. Transaction revenues rose 12%, with orders increasing 4%, at an average order value of $113. Advertising and other revenue ticked up 19% year-over-year to $222 million. Additionally, its loss of $2 billion was slightly below the $2.2 billion expected, while adjusted EBITDA came in $43 million above expectations. Despite seemingly good headline numbers, the stock still fell 4%, as investors take a cautious approach toward this business model in an uncertain economy. Lastly, marketing automation company Klaviyo reported revenues of $175.8 million versus the $167.2 million expected. Its revenue guidance for the current quarter of $195 to $197 million was also slightly above the consensus view of $194.7 million. However, its third quarter loss of $1.24 per share widened from 10 cents last year and was below expectations. Overall, it was a pretty mess start for most of these companies. Despite receiving strong opening valuations and initial day pops, their shares have treaded water since IPOing as investors await a clear catalyst to propel them higher. So far, it doesn't appear their first earnings reports will supply that boost. The Consumer Financial Protection Bureau (CFPB) has proposed new rules that would subject companies like Alphabet, Apple, PayPal, and Block to bankline supervision. That would mean CFPB examiners inspecting their privacy protections, executives conduct, and compliance with laws barring unfair and deceptive practices. Amazon's latest Prime perk is a $9 per month primary care service. The tech giant continues to beef up its Prime membership perks, as it faces competition from Walmart Plus and other retailer membership programs. Its latest benefit is that subscribers can join the primary care service it acquired for $3.9 billion, One Medical, for just $9 per month or $99 annually. Up to 5 additional family members can be added to the One Medical plan for $6 per month per person, giving them access to in-person or virtual medical visits. Adidas may write off its remaining unsold Yeezy shoes. The footwear and apparel giant might have to write off the remaining €0.30 million worth of Yeezy shoes left unsold after it cut ties with rapper Ye. While 2 releases of the shoe have netted the company €750 million in sales, it says it will decide in the coming weeks whether it will do a third release, rather than dispose of the shoes. The sales proceeds will again be donated to groups fighting anti-Semitism. Retail pharmacy workers begin the unionization process. These workers have been raising concerns about being severely overworked and understaffed for several quarters as a labor shortage weighs on operations. However, companies' attempts to remedy the situation have fallen short, forcing a formal unionization push led by the International Association of Machinists and Aerospace Workers and pharmacy labor activists. Organizers say their efforts will target employees at CVS and Walgreens, eventually expanding all U.S. retail pharmacies.